that to you just as soon as that happens. Now, the Reserve Bank has signalled that next week's highly anticipated consumer inflation data could be the trigger for cutting the official interest rate. In the minutes from its September meeting, the RBA board noted that the latest data showed the pickup in underlying inflation had been more gradual than initially indicated, suggesting the medium-term outlook for inflation will be comfortably between the 2 and 3% target band. Business editor Peter Ryan has just left the RBA lockup and he joins us from Sydney's Martin Place. Peter Ryan, good morning. So the RBA's main mission is to control inflation. This is pretty good news for it.
Yes, Joe, and this means that next week's official reading of the Consumer Price Index for consumer inflation on the 26th of October could potentially be the trigger that the Reserve Bank needs to cut rates on Melbourne Cup Day. And in the minutes from the September meeting, as you've noted, they've made the point that underlying inflation has come in somewhat lower than expected, or the pickup in inflation has been less than anticipated, and they believe that this slower pickup and also a revision in the June quarter reading of underlying inflation has fallen from 2.7% to 2.5%, and this makes them much more relaxed about inflation and could give them the reason to ease monetary policy to stimulate demand when they meet in November.
But Peter, I was just sitting with you here on the set the other day when the unemployment figure came through and it actually fell instead of remained stable, and that was a possible influence on the Reserve Bank board actually leaving rates on hold when it meets next time.
That's right. The unemployment rate falling from 5.3% to 5.2% was a surprise. In the hours after that reading, though, some economists felt that may well have been a bit of a glitch for reasons. The monthly figures can be volatile, but the discussion has turned around from an acceptance that the jobs market is softening, but that inflation is much more important, and inflation is what the Reserve Bank will be looking at. And the very dovish language used in the statement that came with the rates decision a fortnight ago, and the dovish language in the minutes from today confirm the case that the Reserve Bank board is looking for the evidence, looking for the reason to do what most economists think they will do, and cut interest rates by perhaps 25 basis points by the end of the year.
And so what's the split with economists on this now then? How many are expecting a cut?
Well, certainly Bill Evans from Westpac, who was on the front foot in tipping cuts of more than 1% over the next year, is probably sitting well for a rate cut by the end of the year, perhaps even on Melbourne Cup Day. And money markets continue to tip that a rate cut is being factored in. But speaking of the Reserve Bank's language, that has also changed quite a bit as well. It wasn't that long ago when the Reserve Bank was saying that there were very strong technical reasons why the market might have those rate cut expectations wrong. No mention of that in today's minutes.
Right. And what about continuing concern about Europe?
Europe remains the very big concern. No resolution at all to the sovereign debt crisis. European leaders can't appear to agree on a plan. And we saw that the German finance minister came out this morning ahead of the weekend meeting of European leaders to find a solution, saying, don't get your hopes up yet. There's not going to be a miracle solution. And that, of course, caused a bit of pessimism on global markets. And we saw markets across Europe and the United States fall on that news, and also a bit of a correction to the Australian dollar, which had been trading at about 103.7 US cents last night. Now, last time I looked, around about 101.5 US cents.
Now, Pete, just before I let you go, I know you were down there for the Reserve Bank minutes, but we can see the posters behind you there now. Can we get a bit of an idea of what that protest is like there at the moment? Are there many actual people around there now? And maybe the camera can pull out and give us a bit of a look. There's lots of posters.
Yes, it's. I'd have to say it's one of the quietest passive rallies that I've seen for some time. But they certainly are making the point about the issue of the system being broken, corporate greed, bank bosses getting their pay rises and performance bonuses while unemployment in particular in the United States and Europe rises. So there is a level of discontent here in Sydney's Martin Place, but it's not what we've been seeing in the main Occupy Wall Street rallies in Wall Street itself, cities like Boston, Washington and across Europe, but certainly the point is being made here.
Yeah, but still a few people down there. And just finally, Pete, because I know you'll be very interested in this Telstra meeting that's on today as well, and the remuneration package that's going to come up as one of the items there. The expectation is maybe that remuneration package might get voted down.
There's always the possibility, particularly now that shareholders actually have the power to make a protest vote. If more than 25% of shareholders vote down a remuneration package 2 years in a row, there's potentially a spill of a board that has to happen. One would think in the case of Telstra, not being one of the most popular companies in Australia, not seen as one of the top performing companies, it does leave a bad taste in the mouth of shareholders who may well have bought in the T2 float at $7.40 a share to wonder where the light is at the end of the tunnel. But we'll have to wait to see what happens down there. But Telstra shareholders are known to be very vocal about their shares and the value, although they do certainly value the 14-cent dividend that's there. So that's another thing that we'll have to be looking out for, whether there's any change in the language on the future of that dividend, and of course the $11 billion compensation for the NBN.
Okay, Peter Ryan, thanks very much for that, and thanks very much to the cameraman for a bit of a look around Martin Place there.